Hello, this is Dudley Baker with CommonStockWarrants.com. Really proud to have with us today Chris Vermeulen with the Technical Traders. I've been a follower of Chris for a long time, and we've done this dance about getting together, and finally we're making it happen here today. Now, for some of our listeners, you may think, well, you guys have both got different business models, so what the hell do you have in common here? So I know, Chris, a lot of my subscribers at Common Stock Warrants have also come over and are subscribers of yours as well. And I think that's a great cost crossover situation. So I see your service, you're basically a trader, playing the US markets, the gold and silver, the NASDAQ, the S&P 500, natural gas, all of this stuff, and present, your followers, the big picture, technical analysis and everything, which is cool. And then we're my side at Common Stock Warrants, database on all stock warrants trading US and Canada. And we're always looking for those opportunities, where we can make hundreds or thousands of percent, the old 10-bagger philosophy.
Yep.
In my world. And so I can see where our listeners may say, well, you guys got nothing in common. Well, what we have in common is timing. We all have to know, when do we come in? When do we exit? Whether we're talking about the big ETFs or whether we're talking about the individual shares. So this is what I look at as our commonality. What do you think?
Oh, I'm totally in sync with that. I mean, I think a lot of your followers and my followers, we all have a lot in common. We all like gold, silver, and we all like those little golden rocket ships, right? And we're coming into that time. We're in that time where they shine, and timing really is everything when it comes to the market. And I mean, we've been waiting like a decade for this to really start to come back around. I mean, I've done a lot of private placements in the past and they've fizzled out just because it hasn't been the right type of play. But now we're in that prime time where, you do want access to a database of where are all these ones doing private placements and doing warrants and all that stuff. And the key is to know, I mean, there's a lot of great small micro cap stocks out there that have had huge runs, and it'd be nice to time, if you're not in them or you want to add, when to get in. Potentially there's going to be a very sweet spot over the next couple of weeks to get back in. But knowing the big trends is really the key, I think, for these stocks, because you need to know when to get out sometimes, right? That's actually the hardest part. Get out on a loser. Really, when do you get out on a winner? I mean, you do have to pocket the profit at some point, or you will become a loser.
Yeah, nobody wants to sell. That's the problem. It's easy sometimes to buy, but man, it's you hang on to it, and then there goes your gain. Okay, well, here's my first question for you. You've recently on your site, you've had like a 3-part series talking about the US dollar and the anticipation from your view that the dollar is going to rally into the US election, the beginning of November. Do you see, if the dollar does continue to rally, how do you see this affecting our investments in gold and silver and the miners? Can they all go together?
It's potential. I mean, we're in a real mixed bag. I mean, there's so many mixed things going on economically on the charts as a technical trader. We've got stuff really swaying with sentiment and the dollars and printing dollars of all kinds of different currencies. I mean, it's a real mixed bag. So it's definitely going to be a really choppy, interesting time. Generally, if the dollar, we have a mixed time right now in terms of if the dollar does rally, I still think the Fed, the stimulus plans, the printing, long-term on the dollar is bearish. And that is good for metals and miners. So it's really tough to say what's going to happen. I feel like the dollar is going to bounce and rally. That may put some pressure on metals. I also feel like the equities market is set for a pullback in general. So if we do start to see the equities market go soft here, start to sell off, and the dollar starts to rally, I think we're probably going to see metals and miners actually be under a little bit of pressure going forward. I don't think there's going to be a ton of downside pressure on metals because this really is the perfect storm just brewing. We can, hear the thunder in the distance. The storm hasn't come yet, but the time is going to come, and it might not be for a while. I think the big move in metals and miners is actually going to be later next year, because I feel as though the equities markets are going to get soft. We're going to be more of an L-shaped kind of recovery. I think we're going back down for maybe a double dip in the equities market. That's going to pull stocks or the metals and miners down temporarily. But I mean, just like in 08, 09, more or less, you'll see the metals market come to life first and just come out blazing, because there's going to be so much stimulus, and that forced liquidation of people panicking out of the market will finish, and it'll just be buyers left. So I feel like we're in that sweet spot right now, late 2007, early 2008, where metals miners performed exceptionally well. Then they traded lower and sideways while the stock market got into some trouble. With elections around the corner, things could get pretty volatile. But longer term, I think we're going to see them go much higher.
No, that's great. So I think we're in sync there, and it's like that's where I appreciate your overview. It's like what I call a roadmap. You're giving me and my subscribers a roadmap, even though we may be buying the individual shares or the stock warrants on those shares. You're giving us the bigger roadmap from a time standpoint. What can we be looking forward to? Okay, another question that I've been I thought for a long time about writing you and asking you this question, but now I've got you under the gun, so I'm gonna throw it at you. Where I see you're coming from, when I'm looking, it's Fibonacci. You're like Fibonacci guy, and that's great. Now, what I'm going to ask you is, I always think about relative strength index. I think of Bollinger Bands. I think of Williams percent R, in the technical field. Now, do you look at these in any way, shape, or form? Are they behind the scenes part of your analysis, or is it strictly the Fibonacci?
I like Fibonacci because it gives me very clear upside momentum targets, where to pull some money off, or where to expect a pause in the market. When it comes to some of those other indicators, Bollinger Bands, I do like. It's nice to know when something's stretched, beyond kind of the standard deviation. So if you're in an uptrend and it breaks a lower Bollinger Band, that means you're kind of stretched a little too far to the downside. And if you're in an uptrend, then that dip can be bought. So I do like Bollinger Bands. I do watch them every day on the 30-minute chart, but dragged out. So it's almost like I'm looking at the daily chart, but I like to look at it broken into 30-minute increments so I can see intraday kind of swings, but it's still the daily chart trend.
Yeah.
When it comes to the relative strength, the RSI indicator, I don't really use it too much. All I know is when it's in the upper zone, and I think a lot of people see this the opposite way than I do, but when it's in that upper zone above that 70, 80 mark, to me, that's the power zone. Once it's up there, that's when you get some of the biggest trending moves in a market. So I look at it almost like flexing your muscle. When that line goes above that kind of upper threshold level, it's almost like, your arm flexing muscle. And it's like, okay, it's a top performer. And it's not overbought here. It's in a power zone and expect it to continue to extend.
No, that's a great way to put it, where most of us think when it gets to 70%, oh man, it's getting toppy, it's getting whatever. I'm always looking for the divergence that comes into play with the RSI or something. So that's relevant. But no, that's a great way to put it, where you're coming from. You're going into the power zone at that moment. Maybe
it's outperforming, right? So it becomes it's the best asset right now. Its relative strength is higher than everyone else. You want to be in the leaders. And then when the market turns down, you want to be shorting the weakest ones, because they're the ones that really already have no demand. So when selling hits, it's just going to drop like a rock. So.
Okay. No, that's great. That's great. Now, with your tools, I'm assuming and you always hate to use the word assuming, right? Because we always know what the hell that is. But the deal, it's like can you use your same analytical tools on individual shares, just like you do with gold and silver? I mean, like for any specific gold company or silver company, or?
Yeah. So I've got a custom cycle indicator that takes cycles from long time frames, breaks it down to smaller ones, and more or less it blends the most active cycles over the last 120 days or the last 256 days. And it can give me an idea of if the majority of cycles are topping out or bottoming, when to kind of get in. And it can do that on any share, any ETF, any index, you name it.
Okay.
My also short-term trending indicator that gives us overbought, oversold market conditions that can be pulled up on anything as well. It's not really tuned to any specific market. It's just following basic technical analysis. And when markets get overstretched in one direction, and if sentiment starts to shift, because I watch the NYSE volume flows, the up volume and down volume. So when everyone's buying on one day, that one of those ratios will spike. And that to me is a sign, hey, if everyone's piling in today, that probably means we're going to see a pause or pullback tomorrow. And on the flip side, if we see a sell-off day and there's a huge spike in selling volume on the NYSE, I look at the NYSE as kind of mass sentiment. It's the big board, it's the big brand name stocks that if any Joe Blow wants to go buy a company, a share, they're going to pull whatever top brand comes off the top of their head and they're going to go buy it. That's the NYSE. To me, I see that as the average Joe's sentiment. So when everybody's panic selling on the NYSE, I'm looking at buying. And usually my indicators or a cycle, if something is bottoming it out or saying it's a buy signal, with that panic selling, that's usually an imminent reversal within the same day or within a 3-day window. And you get a very sharp bounce as a momentum trade for a couple of days.
How did you view the announcement that Warren Buffett is coming into Barrick? Is your mind, you could say, well, that's in the old days, you hated to see that on the front of a paper. Like 2 years from now, if he's coming in right, that'd be the time to be selling into that.
Yeah.
So I always looked at it. We had an incredible Buffett bounce, maybe for the 2 days. A little bit more reality is setting in right now, and it's good for the overall markets. But did you get any message out of him coming into the game?
Yeah, I saw a bunch of headlines of people writing about it saying, Buffett's in, that's like the big red flag. It's time to get out but I don't see Buffett as that indicator. He's not the masses. He's going to preserve capital. He's trying to find something that can kind of hedge currency issues. So I see it as a really bullish thing. I mean, if he's moving into it, he's buying a ton of shares. That means those shares are going to be held and locked up, not sold. So those are shares now that aren't available, which is great because that'll hold the price of Barrick up.
Yeah,
I see it as a very good thing. I mean, he's always bashed gold as just a block of junk, really. Doesn't pay a dividend, so he doesn't want it. But obviously, he's probably got inside scoops that we might not have. And if he's kind of moving into metals as a long-term play, you've got to wonder what he really sees on the horizon with the dollar and other
the way I'd put it, long-term play. I mean, he's not a young man, so you and I are a little younger here, so we can think we got more time. But I'd phrase it. He wants to go out in a blaze of glory. So he's gonna go out as the metals are skyrocketing and shares are skyrocketing. In the next year, 2 years, he wants to be on board this rocket ship. And so, I think this is a great indicator, longer-term indicator for us in the metal space.
Yeah. Well, I mean, if you look at all the different sectors, I mean, there's been hot pockets over the years, but it's really hard to beat the little junior gold stocks when they start a new cycle like what they're in now, right?
Yeah. Yeah.
I mean, you're looking at a 10 bagger is pretty darn common. I mean, when you're at the right entry point for these things, I mean, a lot of them have already gone up that. And we haven't really even started this move yet.
I know that's what's incredible. We've barely gotten started yet. So, I know behind the scenes, you have recently made some I guess, enhancements to your website, upgrades, whatever, you alluded to this, to your subscriber base, and I saw that. And we're doing the same thing over here at Common Stock Warrants. So in our database, now everything is lightning fast. We've got it all in database mode. My son now is computer programming. He's written the code. And so everything is lightning fast, whether you're looking for warrants trading on Canadian shares or on US shares, everything's in separate databases. You can basically sort it, massage it any way that you possibly want to. We are just wrapping up enhancements on our homepage. And my son just put all the mathematical calculations together. We now have what we call a warrant calculator. And when a lot of your folks may say, what the hell is a stock warrant and all this, but I'll say, just visit our website. I've got a free handbook, the Stock Warrant Handbook that I wrote maybe 2 years ago. It's only 40 pages. This is truly simple stuff. But I think investors need to know, whether you're excited about it, but you need to know what we're doing anyway. But what we put together on the home page now that everybody can see is like 9 fairly recent examples of the companies and the warrants. But with the calculators there, you can put in, if you'd invested $5,000 in this company and this, or this in the shares or in the warrants, what's the net result? And it's lightning fast in front of you. And what we're looking for with stock warrants, it's the leverage. We're looking for a warrant. Why in the world would you want to buy a stock warrant? You know, it's to make more money, basically, the increased leverage that you're going to get. Yeah. And all these warrants are trading just like shares, you know, with symbols and everything, whether it's Canadian markets or US markets. But when you see this lightning fast on these examples, it's like, and you get down to the bottom and you'd have made 200 or 300% if you'd have made bought the common stock, and everybody said, God, that's great. What's wrong with that? Nothing. But if you'd have bought the warrant, you might have made 1,000%.
Right.
And a lot of these in the US, in this sector called Special Purpose Acquisition Corp, the SPACs, the SPACs right now, Virgin Galactic, Nikola Motors. I mean, the warrants are going thousands of percent. Yeah. And this is taking place in a couple of months. And it's like, now the challenge is, how do you know which ones to buy? This is your challenge. But the numbers are the numbers, and the opportunities are the opportunities. It's how do you discover those opportunities in real time? Mm-hmm. This is the challenge.
Do you have a way to filter that? Is that what you do? Do you help filter out?
No, I think what we're just getting to now that we can basically control the data, massage the data. It is going to be a matter. Can we filter this by the volume? Well, we can see a breakout happening here. The volume start picking out, and literally when they're going from pennies to many dollars, what is the signal? So we're going to be looking and trying to fine tune this to lead people into these opportunities. So I'm sure we're going to find this, and we're just getting around to now the analytical side of this. Now that we got the mechanics in place and the database, and we got it now, everything running really fast as heck. So and this then becomes the really fun part to now finding the winners. Normally in the past, I've just said, you know, our database is our database. My hot button is still the resource sector. But I know I've got a lot of other subscribers now that are coming in looking at the U.S. markets, you know, the biotechs, pharmaceutical companies, and now in this SPCA space, a lot of opportunity. And I personally cannot, you know, take a personal interest in all of these. It's just overwhelming out of many, many hundreds of warrants trading. But we need the tools there, and we will have the tools there so that subscribers can do their own filtering.
Right.
And so that's where we're hoping to go.
Right. So a couple of questions for you, because I've never really got into trading, or I didn't even know you could really chart warrants. Can you chart warrants? I guess so.
Oh yeah.
So like warrants are really, really new to me, which is the whole point of our conversation here, because it's pretty exciting. I mean, we're totally opposite ends of the spectrum, really.
Yeah.
So out of curiosity, how many warrants would be on the Canadian exchange? Are we looking only at like 50 or 100, or are there thousands? And
well, no, not thousands. Now, again, in our conversation, we're just talking about warrants, trading warrants that you and I can go out and buy tomorrow. Okay. It's on the Toronto Exchange, the Venture, or the CSE, or whatever in Canada. Okay, but I'm thinking, you know, somewhere shy of 100.
Okay. I was picturing for some reason like hundreds or 1,000 or something.
Let's say not enough. Now, I do think as the bull market gets moving along, there's, you know, you're building up. You and I both are seeing a lot more private placements come out, and it's always up to the company's management and their financial advisor. Do they want those stock warrants to trade? I don't make that decision. The exchange doesn't make it. The management of the company with their financial advisors say, yeah, I'd like our stock warrant to trade. And they will make that decision. So I really think we're going to see more and more warrants coming in the mining sector here in the coming months. I think that's inevitable.
Well, that's probably what makes them so lucrative too, is the fact that there aren't that many, but there's millions or hundreds of thousands of investors looking for this.
Yeah.
I mean,
Yeah.
it forces everyone into a small basket of them, right? And we can go
Yeah.
trade them. So
Yeah. No,
once I guess the market starts to get flooded with a ton of warrants, a ridiculous level you haven't seen ever before, or similar to a previous, that'll probably be the sign that, hey, it's getting frothy. Start to lock in some money.
yeah. No, no,
But
and it could be. So I think we're still down. We're still down in the trenches, even though some of the companies have done well and the warrants have
yeah,
done well in the resource space. As you said, there may already be a 10 bagger, but there may be another 10 bagger on top of that 10 bagger still yet to come.
yeah,
But I always tell my subscribers, never feel bad taking some money off the table. You know,
for sure.
I've got one example that I came into. The warrant was it's on Horizon Gold, little exploration company, and it traded as low as 7 cents back right the first week in February when it got listed. It's got a 2.5-year life. I came in at 7 cents, bought a nice position. About a week, 10 days ago, it rang the bell at 69 cents. So it went from 5 cents to 69 cents, even from my 7 cents to 69 cents. So
Yeah,
I basically sold half of my position.
yeah,
Great gain. Going to hold the rest because it's all predicated on what are the common shares going to do. And
right,
chances
exactly.
are common shares are still going to double or triple or better from right here in the
Yeah,
early stage of this market. And that warrant just got a lot more to go. But I think it's advisable for any investor, always, be sensible, take some money off the table, redeploy that into something else that maybe has not moved, and take
yeah,
advantage, and then just build that inventory of stocks or warrants and all of this. So yeah. So anyhow, it's a great game. So no, it's been fun. So I basically started all this about 15 years ago. So it's been quite a journey, and but it's been great. And now with my son, our web guy, geologist and everything, where he's writing our own computer code behind the scenes, we're going to be able to create our own filtering mechanisms.
yeah.
So this is coming into real time right now. So we're excited about where we're going to take our service. We're excited that we have we partnered with you and to get your overview of these markets. And so
Mhm.
I always tell my subscribers, and you either agree with this philosophy or not, but it's like I always encourage my subscribers to don't just subscribe to me at Common Stock Warrants. I mean, they can see my portfolio too. Most of the subscribers, they can see all the mining stocks I own. They can see which warrants I own and relative percentage that I own, et cetera, in these different
Yeah,
companies. But the deal is subscribe to 3 or 4 services, get different opinions. Like where my guys are subscribing with you, they get a different picture. They get a different view.
yeah,
So it's
yeah,
not just total responsibility I have to these. Any of our other friends in the business that have newsletters, especially in the mining space, the familiar names. It's like, it makes sense to me to, and even if you don't run out and buy everything everybody's recommending, you have a better overall feel,
yeah.
sense of where everybody is going to. And I think that it's worth a little bit more money to be able to do that, to have multiple services, and you take away different things from every service that you have.
For sure. Yeah. They all have a little, it's just like courses. I always take all kinds of courses, whether it's in trading or in anything I want to learn something new. I mean, I
Yeah.
always just take as many courses as I can. And sometimes you pay a fortune, thousands for a course, and you skim through it and you take away one tiny little nugget that you didn't know.
Yeah.
And I mean, it's just, that's what it is, right? I mean, you do enough research, you have enough people providing you stuff. Each one gives you a little nugget that satisfies part of your overall trading strategy.
Yeah.
And I think a big part of kind of what I do with kind of giving momentum and swing trading and kind of longer term views on the markets is I find it from subscribers, they tell me they find it very comforting to know what to expect. So they're not shocked. Like during the market crash, February, March, the video, people were just beside themselves, excited that every morning they could log on. I'd recap what's happening and explain, this is what happens during a market sell-off and a crash. People thought the system was collapsing and breaking, but I just had to confirm this is what we're expecting. expecting, based on the previous price action, we're expecting like, another 5 or 10% move in the next 2 days. And we walked the market down day by day. So they knew that we were getting these drops, and then we pretty much called the bottom, and they find it very comforting. So I was just talking to a gentleman about gold and silver, and based on Fibonacci, I have gold potentially pulling back over the next 2 or 3 weeks to 1810, which is a pretty good little pullback, but it'll be a very, very bullish pattern when it does that. It'll be a nice complex ABC correction. It's going to pull back to a support level. It's a Fibonacci level. Both gold and silver peaked out right on our Fibonacci target about a week and a half ago. We sold silver at the high on that day, and now we're letting the market digest, create a new bullish pattern, and we can get back in. And that's the key, is knowing when to get in, when to get out, and when to, be in cash, because there's no point in holding something for a month if it's going to trade sideways or potentially keep falling. You never know how far something's going to fall. So I have silver pulling back to potentially 22. Now, these are the extreme pullbacks, 1810 in gold, 22 in silver. And what I'm telling people is, if it reaches these levels, don't be panicking. These are prime opportunities. These are the levels where it should find support. This is where the recent crash is pointing to those lower prices. If it gets there, that's a really good thing. That means the charts are moving the way they should. The momentum and the power is behind it, and it should be a great opportunity. So people like to know that, hey, I'm bullish on gold, or they're bullish on gold. But any weakness from here is actually longer term, very bullish thing, and it could go lower. So just, relax and don't stress.
That's good information for all of us. I personally hope that projection does not come true, but yet we all need to be prepared for that, so we do need to be prepared, because it is still the upside trend is what we're looking for. So Chris, I think we're going to wrap it up. I'd rather wrap it up on the short end. I think you and I could talk for hours here, so I always like to say we keep these in the time frame. Somebody grab a cup of coffee, listen to what we got to say for 20 or 30 minutes, and then we're out of here and they get on with their life. But I really do appreciate it. I hope that we can do this on some kind of a regular basis, every few weeks, once a month, whatever that might be, if our schedules permit. So anyhow, so we're just going to wrap it up, and we look forward to seeing you again soon. Thank you for joining.
Well, thanks for having me. Yeah.